When I introduced the TRG, I said there would be 3 objectives. The first would be education. And I think it's been very successful in educating our stakeholders on what the board intended. By far, the majority of the questions that come to the TRG, they are discussed, and there is a consensus built at the TRG that there is no need for formal standard setting, that there is just a better understanding of what the board intended. I talked about how there may need to be some technical amendments to make it more cost effective, and a couple of those have occurred. For example, gross versus net for sales tax. The way we had written the standard, the companies in here that are predominant retail, you'd have to go to every single state, county, town, and do an analysis as to whether or not you'd have to do gross versus net. And we recognize that that's not really what we thought we were doing in the original cost-benefit discussion of that particular technical discussion. So the FASB, in essence, unwound that and said it can be a policy decision. That was one where we were able to reduce costs and I think not really impact the benefit to investors. I don't really think there are investors making buy-sell decisions based on the gross versus net of a retailer for sales tax. And I also talked about in the TRG that there may just need to be some interpretations. We know that there'll be disagreements. There are very prominent professionals that look at revenue recognition and look at this on a daily basis, and sometimes they disagree. And we need to reduce the diversity when the diversity could impact investors. And there's been a couple of things that we have started and we'll be finishing